Hey guys, happy afternoon. It's Shauna, your lovely tax goddess. I have to say that I actually love being like in the pocket of our clients. It's probably one of my favorite pieces of my job is being able to get a telephone call like, hey Shauna, here's this thing that's going on and here's what's happening and what should I do? And just being able to answer. I actually had one of our other clients, a good friend of mine, say, you know what, Shauna, you don't promote enough that you just answer questions for people, like whatever the question is that you answer. Now, side note, caveat, I'm not a lawyer, I'm not an insurance professional, I'm not a banker, I am a tax goddess, tax CPA, so I can only answer tax questions with any really good depth of knowledge. But anyway, kind of beside the point, today the video I wanted to talk about was the different entity structures. Now, this is probably where I see people, I'm going to say, mess up the most, just because they pure and simple don't know. Okay. Now, there are really two different pieces to this. There's the legal side and there's the tax side. And as I just said, I can only talk about the tax side, but I have enough knowledge to kind of generally brief you on the legal side. So we're going to start there, but like caveat, you absolutely have to talk to your attorney on the legal side. Okay. Now, on the legal side, there are partnerships, there are corporations, okay, not S or C, so partnerships, corporations, LLCs, and then there's nothing, like no entity of any kind. So you just a person, you're out doing business, but you don't have an entity specific, okay? Now, the reason why I bring up the legal side, okay, the legal side determines which tax options you get. So for example, if you're a partnership for tax. If you're a corporation, so the second option, if you're a corporation, you can be an S-Corp or a C-Corp for tax, okay? If you're an LLC, you can be a partnership, a C-Corp, an S-Corp, or what's called a disregarded entity, okay? And if you're nothing, right, absolutely, it's just you as a person, right? You don't have a legal entity. You are typically a Schedule C on the tax return, Schedule C or Schedule E if it's a rental property, okay? Now, why am I going into all of these details, right, Shauna? I don't want details. I want you to tell me how to save money, okay? Which details you choose are going to make a difference based on which entity you have, okay? So for example, if you're making, in our world, we believe that this is a tax goddess rule of thumb, okay? In our world, we believe that if your net profit is at least $50,000 consistently year over year, that you should probably be taxed as an S corporation. Now, that could be an LLC taxed as an S. That could be an Inc., a corporation taxed as an S. Really doesn't matter which one. There's some other pros and cons to each one of those. So, of course, always talk to your experts to determine which one is best for you. But if you're making more than $50,000 a year in profit, and that's before you take out money for the owner, but after all expenses, one of the reasons why you would go to an S corporation is because it can actually help reduce the total amount of self-employment taxes. So that's 15.3%. That's FICA and Medicare taxes that you would not have to pay on about 70% of your income. So if you're making $100,000 worth of profit, 70% of that income, so 70% at 15.3% in savings. So I should have had a calculator up, but $100,000 times 0.7 times 0.153, that's $10,710 of taxes that you don't have to pay. So for anybody out there listening, if you're making $100,000 worth of profit and you are not an S-Corp is probably one of the simplest, easiest moves. There's entire businesses, I think TaxHive used to do this. The famous guy from Shark Tank, I can't remember his name, but there's a dude from Shark Tank. He started a whole business specifically around small businesses that are making $100,000 worth of profit. We're going to save you 10K. Converting to an S-Corp, one drop in the bucket, saved you 10K. Okay. And you guys know, listening to Tax Goddess, you get free advice, right? You don't have to worry about paying for that. But anyway, long story short, S-Corps are great if you're making more than $100,000. Now, let's dive into some of the other alternatives here. Let's say you have serious medical bills for you, for your spouse, for your parents, for your kids. Somebody in the close family has significant medical bills and you want to get a tax deduction at the business level for those medical bills. A C corporation might be the right choice for you. C corporations are allowed to pay for all of the medical bills for all of the employees. So be careful if you have a bunch of external employees that aren't you and your family, okay? But C corporations can pay for the medical bills. So if you have a history of cancer in the family or Alzheimer's, and you know that there's going to be a ton of medical bills, set up a business, right? Maybe you're paying for those medical bills for your parents. Maybe you're helping them in a home or a facility. If they can still do a job for the business and their employees, you can write off all of those medical expenses through the business as a deduction. So unfortunately, these days, medical expenses can be extremely costly. So let's stay with our $100,000 business, our $1 million business, whatever it is you're earning. If you're a C corporation and you have $100,000 worth of medical bills and $100,000 worth of income, your net profit is now zero. You got to write off all of the medical bills and keep whatever other money you might be generating, right, after those medical bills. So depending on what you have in your life, okay, are you married? Do you have kids? Do you want to set up educational reimbursement plans? Is charity really important to you? The entity that you choose is probably one of the most important decisions to be able to help you pick the right deductions for that type of entity for what you want, okay? Now, one of the other things many people just don't even think about here is looking at, well, you don't have to have just one entity. Maybe you want the S corporation to remove that FICA and Medicare tax, but you also want a C corporation to pay for the medical bills. It's a little more expensive because, of course, now you have two entities, two sets of books, two tax returns, right? So it can get a little more expensive. But if you're getting $10,000 here and $100,000 write-off there, and you have all of these expenses that are now legal and above board and you are able to deduct, having multiple entities might make the most sense for your situation. Now, there's one other thing that I want to bring up here, which is the long-term impact. Okay, often we see this, if you guys have ever heard of something called QSBS, Qualified Small Business Stock, Section 1202 or Section 1204, all of these code sections, all of these names are relating to a business that creates, they create a business, they grow it really fast or very large, and then they sell it, okay? Typically, the first $10 million of the sales price, if you fall under one of those classifications, is tax-free. So here we are talking about a $10,000 savings with an S-Corp, but if you're planning on building a business and it's really going to blow up, you may want to go the C-Corp, C corporation route, because you might be able to qualify for the first $10 million to be tax-free. Now, there are some very specific qualifications, and that is not something I'm going to cover in this video, okay? But if you're building a business, if you've already built a business, but you're going to be growing it even more, you're going to be expanding, looking into setting up a C corporation for selling a business down the road. So this is that long-term impact planning. A C corporation might be the perfect choice. Now, of course, I've just thrown a ton of information at you. So if you aren't sure if you are in the right structure, if you aren't sure if your CPA knows the difference between the structures and which one is best and which one you need for what, and you want that outside third-party opinion, that's what we do here at Tax Goddess. We are strategists, okay? So our job is to work with your CPA, with your financial advisor, with your banker, whoever is on your financial team, and come up with the best strategies for you to be able to get as much money as possible in the short term, in the long run, get the most deductions, and keep all that cash in your pocket. So if you want some help looking at the differences and trying to figure out which one is the right entity for you, reach out. That's what we do. We'd love to help. All right. So have a great day, y'all. And I'll see you guys tomorrow with a new topic. All right. Bye.